Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Sir John Templeton.
Right now, gold is acting like that one quiet kid in school who suddenly walks into the reunion driving a Lamborghini. For decades, gold was the boring asset. It just sat there. No earnings, no dividends, no exciting product launches. Just a shiny rock.
And yet here we are. Gold has been smashing records. Central banks are buying it like it's Black Friday. And investors can't decide whether this is the start of something massive or the final stage of a bubble.
So, what is happening to gold? Because when an asset that does absolutely nothing starts outperforming assets that do everything, it's usually a sign that something bigger is happening beneath the surface. And the weird part? We've seen this movie before.
Let's start with a headline. In the last few years, central banks around the world have been buying hundreds of tons of gold annually, and demand remained unusually strong even after prices hit record highs. In Q1 2026 alone, central banks added roughly 244 tons to reserves. Why? Because governments are beginning to treat gold less like jewelry and more like financial insurance. And that takes us back to the 1970s, the original gold panic. Back then, inflation exploded. The dollar was losing purchasing power. Oil prices were surging. Confidence in governments was falling.
Sound familiar? Gold went from roughly $35 an ounce at the start of the decade to over $800 by 1980. That's not an investment. That's a financial riot. People weren't buying gold because they loved gold. They were buying it because they trusted everything else less. And that's the key lesson.